Thanks, Amanda, and welcome everyone to this is our third session of our annual housing conference by virtual nature, and we've had very little difficulty. So thank you for your patience for some of them that weren't able to get on in the last session. Today's session is labeled Industry Update, Planning for the Future. You know, we can all agree that it's been a rough 6 months. There's been a lot of changes. You heard from the last session how it affected loan officers, and now we're going to have a chance to listen to our partners on what kind of changes they have seen in the last 6 months and what changes that may be coming in their particular industry. So we have, and I will introduce everybody right now, and then we'll start with Jessica. First, we have Jessica Wright, who works is our representative for Fannie Mae in the South Dakota area. We have Ruth O'Neill and Roxanne Woodring from USDA Rural Development. I believe Ruth is in the western part of the state and Roxanne is in the eastern part of the state. We also have Carla Manzanares from FHA, who is the Housing Program Director at the Denver Hawk. And we also have from the VA, Kim Gerard. She's a Loan Guarantee Officer located in St. Paul Regional Loan Center. So with that, I think we will start with Jessica. We have a PowerPoint, so bear with me. We're going to try to get that up. Jessica, take it away.
Got to figure out my buttons here. If you could confirm that you can actually hear me, that would be fantastic.
Yep, we can hear you, and I'm trying to get your PowerPoint up here, so bear with me.
No problem. Just let me know when you have it up.
Everybody should be seeing it.
All right. Okay, I see it on my end too. All right, wonderful. This is great. This is my first Skype since COVID. And normally the technology doesn't work for me here at Fannie Mae, but I'm so glad that we got it to connect so that I could be with you virtually. And of course, I want to thank South Dakota Housing for having me here today. I'm really excited to partner and be here and share. I've got 15 minutes, and so I want to focus some brief comments and material, go through it with you. I'm going to share and discuss a couple of key areas. First of all, I will go through some recent selling guide updates. I'll provide you with a quick refresher on HFA Preferred. Is that a feedback? Do you hear feedback?
Mm-hmm.
All right, let's see. I think we got that taken care of. So I'll go over a quick refresher on HFA Preferred. I'll share how the product is being utilized to reach low to moderate income borrowers, also while helping us reach our duty to serve objectives. I'll spend some time highlighting some interesting areas of focus for Fannie Mae, and it'll share how we continue to support the housing market. So that'll be kind of the primary bits and nuggets that I will focus on today. Next slide, please. All right, of course, before I get started, I have to give the famous disclaimer here, right? Obviously, I've made every intention to make sure that the materials for today are going to be as accurate as possible. But in the event that anything is a mistake, you want to always refer to the selling guide and the servicing guides. Those are the official statements of Fannie Mae. Those are what control in the event that there's any misinformation. Next slide. Just start from where we left off at, right? Last April, I was with you all, and I was able to share a couple of pieces of information around your market. And I think it's always good to kind of start there so we can have a level set. So last April, when I was with you all, I noticed when I compared the data from my last presentation to this presentation, a couple of data elements have changed. So according to some information that we have using a heat map source and the American Community Survey data, I was able to see that you've got an uptick in renters in your market. So the new data shows that there are now about 35% of renters that can afford 100% AMI. And this is up about 10% since last year. It looks like the income year over year is down about $10,000. Millennials and Gen Xers seem to be the majority of the population in your market. So I want to just plug in there how you think about how you reach those particular markets. How do they, buy, save, use technology? So be thinking about that, and you'll hear more about some materials and information we have to help you. Home prices are down 16,000 approximately, and there are about 3,000 more renters that have entered your market. The data shows us that there is an uptick in Generation Xers, and that's up by 3%. So typically that's the range of 35 to 49-year-olds. So, be thinking about how do you reach them? What modes of communication media are most utilized for this age demographic? Looks like also that Hispanics are up 4% since last year, so they're now representing 8% of your population. And let's see here. In a minute, I'll show you a little bit more about how you can go ahead and reach those demographics. Last 2 points that I want to make about this slide before we move on. It looks like that there's an increase in the vacant properties in your market. Roughly about 3,000 are available. This is very consistent with last year's report out. There seems to be approximately about 60% of your borrowers in your market that have received some sort of secondary education. And so when we think about that, it's all about how can you utilize Fannie Mae's student debt solutions, and how are they playing a critical role in helping you reach these home buyers? How do we get them to achieve home ownership through those flexibilities? Go ahead and go to the next slide. So because the market is changing at rapid speed, things are just evolving, as Brent said earlier, we're constantly looking for ways to improve our policies and our products and our technology. I'm not going to call out every announcement that was listed on the slide that you see there, but I just want to call your attention to our most recent announcements dated October the 7th. So in case you missed it, we did some updates to the guide to align as it relates to remote online notarizations. We clarified our project standards requirements concerning condotels, ineligibilities, pre-litigation activities, and recreational leases. So we made some updates to our project standards. We did remove the validation of employment and income using manual verification reports from DU Validation Services. So we made an update to the third-party employment and verification vendors. We also changed and clarified our eligibility requirements in the guide to make it easier to understand in terms of our home-ready loans and negotiated variances. And then we clarified our cash-out.
Jessica, you are cutting in and out. We can bear with me just 1 second. I'll try to get her back on the line. Okay, I think while we're trying to get her back on the line and pick up where she left off, let me move to our next presenter. Okay, we'll move on to Carla Manzanares, who from FHA. I know she was having some difficulty getting on, but I think you're on the line, right, Carla? You'll have to unmute your button or your phone.
Can you hear me?
I can. Good morning.
Oh, perfect. Good morning.
Thanks for jumping in there. We'll try to get Jessica back on the line. We lost her connection somehow, but Carla is with FHA. She's a housing program officer. And basically what we'd like to do is have you just explain to us what's going on at HUD in the last 6 months with COVID and everything that's going on, and what we can expect in the next 6 months. With that, okay, I'll let you take it over.
Sounds good. Thank you. So again, I'm Carla Manzanares, and I work in the Denver Homeownership Center Director's Office. The Denver Homeownership Center covers a 17th state jurisdiction, which includes Region 5, a part of Region 5, all of Regions 6, 7, and 8. In response to the economic fallout of COVID-19 pandemic, FHA issued several mortgagee letters, and I'll cover a few of the most recent. Mortgagee Letter 20-27 extended the foreclosure and eviction moratorium in connection with COVID-19 through December 31st of this year. Mortgagee Letter 20-28 announces the re-extension of the re-verification of employment and exterior only and desktop appraisals that initially came out in Mortgagee Letter 20-05. Mortgagee Letter 20-30 excuse me, informs mortgagees of underwriting guidelines for homeowners who are granted a forbearance due to COVID-19. It also defines the requirements that borrowers must meet to request a new FHA-insured mortgage after they successfully complete their forbearance period. FHA has embarked on a multi-year IT modernization initiative, FHA Catalyst, which is already improving how mortgagees and their authorized users do business with FHA. The Catalyst is supported by a $40 million appropriation from Congress. It is a secure, flexible, cloud-based platform that'll provide a modern, automated system for lenders, servicers, and other FHA program participants. It enables FHA to more efficiently and effectively manage its programs and processes. Currently, the Catalyst platform contains the functionality to accept and process the electronic submissions of case binders, which is great during this time as we're all working from home and staff is still able to keep up with endorsing loans. It also accepts the processing of supplemental claims. FHA Catalyst will be the platform for all single-family HUD systems, and coming up next is the single-family loan origination module for forward mortgages. We're building and testing a rules engine that will include an underwriting feedback certificate. Single-family FHA has been working on process efficiencies since the pandemic, including the elimination of 2 contractors in the Denver Homeownership Center. Fiscal year 2020 represents the best year in terms of FHA loan production in over 5 years, and that's due to low interest rates, which is producing a lot of refinances. FHA refinance business is up 50% year over year, whereas purchase business is up 14% year over year. FHA delinquencies increased to 12.34%, and the average loan in portfolio is $174,318. Forbearance rates from COVID are 7.15%. However, 21% of those under forbearance are current. As loans move from forbearance to a pay status, remember a partial claim due to COVID can go up 30% maximum. And as far as staff returning back to the Denver office, HUD is currently in phase 1 and still has 2 more phases to go through. So realistically, we might not be back this calendar year. We'll just have to wait and see what happens. But headquarters is going to reevaluate everything next month to determine if we'll move on to phase 2. So that is it for me. And I think I'll go ahead and turn it back over to Brent.
Okay, I think we have Jessica back on the line. Jessica, are you still with us?
I am. Hopefully you can hear me. I'm not
Okay.
sure how far I got along before it went dead.
I think you were talking about the lender letters, and I will share the screen here in 1 second.
Okay.
Okay, I am on recent updates, correct?
Okay. I'll go back over that then. So just to be brief, I won't call out the recent announcements, all of them that are on the page, but I will focus your attention on our most recent updates. We did some updates in the selling guide to address remote online notarization. We clarified our project standard requirements, so you'll want to take a look at that. We removed validation of employment and income using manual verification reports. So there was an update to the third-party employment verification vendors. We just changed some language within the guide to address how we deal with variances under the Home Ready eligibility. And then we updated our information around Ask Polly. So specifically, we clarified cash out refinances when it comes to multiple borrowers and some information related to gifts of equity that are permitted. So things are always rapidly changing, but the point here is that that was a more recent announcement. I wanted to make sure that I called it out for your attention. On slide 5, please, we'll go ahead and talk a little bit about our COVID-19 effort. So, you know, it goes without saying, Brent had mentioned earlier about our different environment, and you know, this is unprecedented times, as we all know, and we remain committed to our affordable housing mission. So our housing goals have not changed, and we're very passionate about continuing to create and preserve affordable housing. That too has not changed. We are really focused on how we respond to the current needs and how we help people throughout this critical time. So we have some resources that we've made available on our COVID-19 resource page. In particular, we've supplied information around Know Your Options for renters and homeowners who are struggling to make payments as a result of COVID-19. And so this is also part of a broader campaign that we launched called Here to Help, and I'll share a little bit more about that. But while we're on the thread of the Know Your Options, one of the things that we did was we leveraged technology, in particular to create a Know Your Options virtual assistant. And this is a new Autobot technology that we created to be able to provide the market with 24 hours, 7-day-a-week support to answer consumer-related questions, to give them what they need so they understand what's available for mortgage relief and help them with any additional resources that might be available. So it's very nifty. You can test it out yourself, but the point is that we're trying in every way possible to make sure that we have resources. The last point I'm going to make is that we've been really heavily engaged with the housing counselors and intermediaries across the country to help educate housing counselors as well on the available COVID relief options so that they can be better able to support the borrowers and renters through the pandemic. Next slide, slide 6, please. This is regarding Ask Polly. So, of course, I mentioned earlier with all the fast-moving parts, it's really hard to be able to keep up with what you need to review and retain. And so I just want to bring back to your remembrance the Ask Polly tool, which we created to use natural language processing to help you find answers to Fannie Mae policy questions. So, most recently I took a little bit of a dive to see what's being asked in our realm of business, and there seems to be a lot of questions in the HFA space around, co-signers and limited cash out refi, income, appraisals, student debt, all of that. And you can find that information there, and sometimes that's a great resource to be able to get you a quick answer to a selling guide related question.
Jessica, I'm going to interrupt you. I apologize. There are some lenders on the line and some lenders and some people that are not lenders. So maybe if we could is that available to non-lenders or lenders only?
Oh, that's a great question. So for the Ask Polly feature, I believe that you have to be a lender to access that information. I will take it offline just to validate if we've expanded that out to non-lenders. So great question. Let's put a pin in that. And when we move to the next speaker, I'll double back and get the answer and put it in the chat. But when we created it, it was to be able to help arm the lenders with the information as a quick resource, because sometimes the selling guide is really hard to consume and you're just trying to quickly get an answer.
Okay, great. Thank you.
Absolutely. So on slide 6, this is the information I wanted to share. It was related to our Here to Help campaign. It supports our relief efforts around COVID-19, and we're creating this microsite to be able to provide you all with information readily available for external use. Ideally, in this particular microsite, what we have created is a one-stop shop of educational resources to help you point your audience to the information that they need. So on there is information for homeowners and renters on their options, downloadable resources in both English and Spanish on steps that someone impacted by COVID can take on forbearances, payment deferrals, information on what do you do after, social media stuff. It's just a bunch of stuff that you can leverage. But the point here is that we're trying to arm you with as much information to help continue to support and sustain folks that are affected. So I won't steal any thunder, Brent. I know you have another panel that's going to be all things COVID, but this certainly ties and dovetails into what you'll be sharing later. So we'll skip over slide 8. That's just the placeholder there. And if you would focus now on slide, I believe it's 9, so I can give you a quick update on preferred. So just for sake of just grounding for those who are new and haven't had a chance to utilize some of South Dakota's products, in particular, Fannie Mae offers HFA Preferred, which is our conventional mortgage product exclusively for housing finance agencies. That's what we do with South Dakota. And this particular product is available for borrowers who need to purchase a home with as little as 3% down. They can use flexible sources of funds. They can use gifts and grants, cash on hand. It's a 30-year fixed mortgage, and it has reduced private mortgage insurance. There is an AMI component, an area median income component to this that's new that we put in last year. So the reduced private mortgage insurance applies to 80% AMI and below. There's a couple of features that are in there that I just wanted to call out. We do allow other flexibilities to help you when you're trying to reach more borrowers. Specifically, non-occupant borrowers are permitted, border income is permitted, and so is rental income. That's not more widely used, but I mean, it is a flexibility that we have in there. And lastly, earlier you heard me mention the student debt stuff, right? You have a lot of your market that has some secondary education. So presumably they've, taken on some of that debt. And so, as they're going to try to get home ownership, we've made it possible to have some flexibilities in there. Debts paid by others is allowed. So we allow that so that we can exclude the payments that are being made by others from the DTI. And we've tried to improve our calculation process so that we can help you to make it a little bit easier. Next slide, please. I think that's slide 10. So, I explained a little bit earlier about the Gen Xers and the increase in the Hispanic population in your market, and just wanted to make a refresher. And this information on the Marketing Center is available for everyone, in specifically lenders, real estate professionals, the whole nine. This is a free marketing material that we've created to help housing professionals be able to access and customize marketing info. And so as you're trying to think how will you reach more folks in your market, this is a great way for you to leverage some information that's already available. If you could go to the next slide, that's slide 11, and it's related to our mortgage translation clearinghouse. I just wanted to call your attention to this because I realized that, getting access to Spanish translated materials is not always easily accessible. So we have this mortgage translation clearinghouse where we partnered together with FHFA and with Freddie Mac to make sure that we had translated materials. That's mortgage documents, terms, and disclosures available in various languages. So when you're trying to tap into that 8% population that's increased in your market, we do have tools available to support you and help you. A couple other things before we wrap up. I've got a couple more slides. If you could go to slide 13, and that has to do with our duty to serve objectives. I just wanted to call out that we're still very engaged in our duty to serve efforts, right? And so we focus that attention on manufactured housing, affordable housing preservation, and rural. We have very strong partnerships with HFAs and lenders who've helped us to really make some great successes in this. So within Duty to Serve, we've been able to test and learn some, unique things. We've been able to increase our, engagement and loan production in rural areas. and have done some nifty things around marketing and educational campaigns to increase awareness. On the next slide, I want to call out a couple things, and that is in South Dakota, you all have some duty to serve areas in which we're uniquely focused, in particular the rural demographics, which are really tough to meet. So we're focused on that. We're focused on how do we bring together, lenders and real estate professionals and the home buyers in these markets that are really hard to reach. So connecting them all together is a unique focus for us. I'll skip over the next slide for sake of time, and it had to do with the rural census tracts. But it just couples the thought around, there are plenty of opportunities to partner and lend in South Dakota using preferred in these rural markets in ways that I described earlier. Let's see here. One second. I think we're going to touch on two other things, and then I'll wrap up. But I just wanted to also highlight on slide 16, we've got the Native American efforts that we have underway. And not a lot has changed in this area. We still have our memorandums of understanding with some of the tribal lands. We're still working on solutions and using manufactured housing in this area to support as an affordable housing type. You still are able to use HFA preferred to reach more Native Americans on tribal lands. That product is available. So just wanted to re-emphasize. We also do purchase HUD 184 loans as well at Fannie Mae, so that's not often widely known. Just want to call your attention on our HomePath HFA incentive on slide 17. When we talk about the affordable housing stock crunch, right, that's still very much a challenge, and we do offer an additional 3% closing cost incentive when you're using an HFA preferred mortgage. So if you go on homepath.com and you look at some of the Fannie Mae REO, you may find that there are available properties in South Dakota that you can get this extra benefit to reach more borrowers. All right, Brent, if you could skip over to slide 19, I'm going to go ahead and do a quick wrap up and talk about what we're focused on ahead and bring you to closure. So, in previous, I mentioned, I think maybe one other time, around how we launched our Sustainable Communities Innovation Challenge. We made an early investment of around $10 million, committed to be able to generate more affordable housing solutions. And so we're now in phase 3 of that challenge, where we're focused on affordable housing, education, and economic mobility. We've selected some projects across the country, and so these particular projects are focused on increasing affordable supply through integrated education, developing valuable skills through green construction, expanding access to financial literacy to facilitate resilient homeownership, helping homeless students, expanding affordable housing and early childhood education. There's a lot going on in this area, but the whole purpose is that the information that we're learning from these various phases of the challenge, they're going to help us to be able to have insights and tested approaches that we could use and scale in other markets. So this has been a really valuable exercise, great partnership, and we're excited to see it move through phase 3. The last big nugget that I want to share, or two last points that I want to make, is that we're very focused on housing and specifically equity in housing. And so we know we're tackling this with the rest of the market, and it's a tough challenge to address housing inequities, especially in the Black home ownership rates and also underserved groups in our market across the nation. So we're very much engaged in challenging ourselves to think more broadly and creating opportunities to reach more underserved populations. We've been very focused on understanding what those opportunities are to bridge those gaps. We're trying to develop meaningful solutions that our industry partners can use to accelerate change. And, one of the ways that we've done that is through our Future Housing Leaders program, which we continue to offer, but it helps us to be able to support diversity in the mortgage industry by connecting college students to paid positions and internships and opportunities And it brings us a point in time where we can help employers, provide diversity and inclusion opportunities for top candidates. So we're partnering with the MBA, the Hispanic Association of Colleges and Universities, and Management Leadership for Tomorrow. I'll close with just saying that we're committed to continuing to support the housing finance system. We want to make sure that it's free from racism, and we're looking to partner across the housing sector. So we're committed to finding solutions, providing resources, and we want to partner with those who have the energy to make lasting change. So thank you guys for your time. I hope this has been informative, and I'll take questions in the chat and circle back on the Ask Polly question from earlier. Brent, I'll turn it back to you.
Okay. Thank you, Jessica. Let me get my screen back up here. Okay, now I think we'll hear from Kim Gerard, who is the Loan Guarantee Officer from St. Paul Regional Loan Center for the VA.
Hi, everyone. Thank you for having me. My name is Kim Gerard. I am the Loan Guarantee Officer here at the St. Paul Regional Loan Center in St. Paul, Minnesota. And we're going to give you some overview of some COVID-19 related items for the home loan program, as well as talk about some other things that are going on right now with the program, and then future state of what are some things to expect moving forward. So I also want to thank South Dakota Housing and Brent for having us here. I think this is the first time we were able to participate with this in recent years, so thank you for that opportunity. So with COVID-19, we've continued to have all RLCs, regional loan centers nationwide have continued to be operational. However, since March, we have not had in-person contact available for veterans if they did have questions and wanted to come into one of the 8 regional loan centers nationally. But we are available 8 a.m. to 6 p.m. Eastern Standard Time for anyone that wants to reach out to any of our staff calling into our Hung Group line. So 2020 has been an unprecedented year for loan volume for the VA home loan program. It was a record-breaking year. We had a 100% increase in loans guaranteed since last year, and this year we had more than 1.2 million loans that were guaranteed for the VA home loan program, of which 400,000 of those were purchases. I'm sure many of you are interested what are the stats for South Dakota. So we had more than 3,600 loans that were closed in South Dakota. The average loan amount was $248,178 with an average interest rate of 3.05% for the VA home loan program. Some of the things that we have done to assist with veterans as well as lenders and appraisers in moving forward as we transition to this new environment with COVID-19 is we had a variety of circulars that were released. Over 15 circulars have been released since March tied to the CARES Act or COVID-19 related. So things I wanted to highlight are first off, we've issued flexible guidance to lenders regarding the verification of employment due to temporary closures, business closures due to COVID-19. We also issued underwriting guidance to lenders to assist veterans who may have had temporary curtailment of income and utilize the CARES Act forbearance. That circular 26/2025 addressed both purchases, cash out refinances, as well as interest rate reduction refinances. We also just clarified that our longstanding practice of acceptance of electronic mortgages, which was prior to COVID-19. We also sent out circulars that just provided reminders that a loan is considered guaranteed at the date of closing. It's not when the evidence of guarantee is issued. So we just provided clarification and reminders to the industry on that. We also have been continuously monitoring the availability of appraisers to see if there was any impact due to COVID-19 concerns. The standard time frame for origination appraisals to be completed in South Dakota is 15 business days, and for fiscal year 2020, the average time to complete the appraisal was 14.28 days in South Dakota. We also provided guidance that provide temporary measures to complete exterior appraisals on occupied properties unless the loan was 1.5 times the conforming loan limit. And then we've also provided guidance to assist veterans whose income has been impacted and they requested the special forbearance under the CARES Act. And we also have employees nationwide that are working with those veterans to try to assist them as they transition out of those CARES Act forbearance. Some other things that I wanted to highlight and make everybody aware of, this month we are actually in the process of a realignment of the regional loan centers nationwide. So currently there was 8 regional loan centers, and for those of you that are familiar with the program, each regional loan center had a loan guarantee officer. Under that loan guarantee officer, they oversaw the origination, the servicing, as well as the appraisal aspect of the program for a geographic location. Starting this month, we're actually moving towards business streams. So those 8 regional loan center loan guarantee officers are going to be transitioning into new positions, either the AD for field, the assistant director for field operations, or an assistant director for program and performance management for each of those business streams. So for instance, myself, I will be overseeing the loan production origination aspect of the program for the nation of the 8 regional loan centers versus focusing on loan production, construction evaluation, and the servicing just in our 9-state geographic jurisdiction. So that's something that's happening this month. The hope is with this is that we'll be able to make agile decisions quicker, as well as address consistency, as feedback from the industry is that sometimes depending on which regional loan center you call, you might get inconsistency with the guidance that you're giving. So this is one thing that we're hoping to try to address with this realignment. We'll still continue to have employees located in each of the 8 regional loan centers. It's just the employees will continue to work with their day-to-day operations. They'll just maybe be reporting to a different person as part of the operation management structure. Some other things that I wanted to also highlight for you is to continue the use of the automated certificate of eligibilities. Right now, the success rate for lenders to obtain the certificate of eligibility without VA having to assist is about 75%. This past year, we also just in the last month had done some additional enhancements that has increased that success rate for lenders to get the certificate of eligibility. So we encourage you to do that. For certificates that have to be issued by regional loan centers, right now we are issuing about 95% of those within 3 business days or less. With unprecedented loan volume, that results in unprecedented loan volume calls, as well as questions, concerns about the program. We ask that you hold off in contacting regional loan centers unless you haven't received the certificate of eligibility within 5 business days. That'll allow us to work the oldest cases that are in, get those out sooner so that we can get the certificates issued as quickly as possible. Another thing that happened this past spring was that we transitioned to a new appraisal management system through Veros. That's contracted with Veros. That training for the staff appraisal reviewers is available on our website. So the last thing I wanted to highlight on is where are we going from here? So Loan Guarantee at the national level is focusing on automation, collaboration, and evaluation. And some of the things that we're working on is in the next couple of years is we're working on an automated collection of loan application data and closing disclosure data. And with that, as we are able to obtain that information automatically, we're moving towards wanting to get to guarantee certainty. So you have that prior to the loan closing versus requesting your evidence of guarantee after the fact. Also, I would encourage everyone, if you want to kind of see the roadmap of VA, is take a few minutes if you do a Google search for loan guarantee roadmap in Google. It'll pop up. One of the first links will kind of give you the PDF document that kind of outlines where we're going for the next couple of years through 2025. So that is a brief synopsis of everything that's going on with Loan Guarantee. I will put in the chat the link to where the circulars can be found that addresses both COVID-19 related items as well as other policy items for the program. So that is Loan Guarantee in a nutshell.
I wanted to mention that if you have any questions for Kim or Carla, Ruth, or Roxanne, who are going to speak next, or Jessica, please put the questions in the chat box. If we don't have time to answer those questions, we'll get you the answers, or they can answer you offline. So thank you, Kim, for your presentation. And with that, we'll move to Ruth and Roxanne, Ruth O'Neill and Roxanne Woodring, who are with the USDA Rural Development, will share with us what's happening at USDA Rural Development. So I'm not sure who's going to take first lead, but I'll turn it over to Ruth.
Hi, Brent. Thanks, everyone. We'd like to thank you for this opportunity today to talk about rural development, some of the changes we have for fiscal year 2021. What a year 2020 was. I'm glad it's over. And now we're awaiting our funding for fiscal year 2021 as we're on a continuing resolution until December. Last year, we were allocated $1 billion for the 502 program, and in our guaranteed program, they were allocated $24 billion. But we couldn't have done this, not without all of our partners. First, a little background for those of you who might not know what rural development is. We are part of the Department of Agriculture. We provide assistance to rural communities in providing or improving rural living, particularly in the areas of broadband, community economic development, water and waste disposal, water waste treatment centers, as well as our rural energy and cyber security. And of course, rural housing is also part of our projects. We have multifamily projects and single family purchase as well as repair in existing homes. Roxanne and I have 7 other team members that manage our 502 Direct program. This is mainly for purchasing homes for the very low and low income. We also work in the 504 program, which is for repairing existing homes. This provides loans and grants for the very low income. Last year in our national budget, we were allocated $1 billion for the nation, and in South Dakota, we spent a little over $9 million. In the 504 program, which is our repair program, we were able to spend $224,000 in loans and grants, assisting 38 households. This is a well-kept secret, it seems, because I know there's many more homes out there that could use our assistance for this next fiscal year. But we need your help in getting that word out there. If you need more information about this program, feel free to reach out to any of our local offices, which we'll talk about at the end. The guaranteed program, which is for the low and moderate income, this helps purchase home through a local lender that uses a government guaranteed back loan for 100% financing. This is our largest funded program in our portfolio and is our most popular program. Last year, we spent a little over $23 billion. Rural Development provides 14,000 affordable multifamily rental units in rural areas. These are geared for low-income, elderly, and disabled families and individuals, as well as domestic farm laborers. We extend our reach by guaranteeing loans for affordable rental housing designated for low and moderate incomes in rural areas and towns. A few changes that will be happening in rural development for the upcoming year. So I'm going to talk about 2 of them, and then Roxanne's going to talk about the direct program. In our guaranteed loan program, as you know, this was centralized under a national program. The nation was split into regions, and teams now process all the applications. One of the new changes coming up is we will be getting a call center for you, the lenders, to be able to call in and ask questions rather than to submit everything by email with the option of a callback. This will be much more consumer friendly and get a much faster response time. Our multifamily program is also undergoing changes. They too are going to be centralized into a central structure under Washington, D.C. You'll see some staffing changes locally. The nation is being structured into 4 regions, and inside each region there will be teams that will specialize in different functions such as servicing, asset management, preservation, and production. So you'll see some new names coming across your projects. And with this, I'm going to turn over to Roxanne to talk about some of the changes for our direct program.
Thank you, Ruth. Good afternoon, everyone. With the direct program, we are also going to be tackling centralization, but we're looking at the local level, not nationally. With having a small team and a lot of area to cover, we're hoping to centralize into the teams that'll be more effective and efficient. One thing we also like to focus on is getting packagers that are local. We have a small team and the goal is to serve many families. We need your help. Packagers can be a vital part for us to accomplish this goal. Packagers meet with the families either through technology or in person to help them fill out the information and gather documents to submit to the centralized team. This will help us with being able to process the file to a certificate of eligibility or COE in a much quicker manner. Once a COE is issued, a packager may step back and let RD finish the process if they want to, but in many cases, the packagers will assist the families finding a home that they can afford, but that step is not required. Once the family enters into a purchase agreement, the home inspection is received, then the appraisal is ordered. This is another area that we need your help in. The appraisal process, just like the private sector, we are having issues getting appraisals done in a timely fashion as we need more appraisers statewide. We have a new process where we use national vendors that assign the appraisals for us. If you know someone who is interested in doing more appraisals but is not aware of the new process, please feel free to reach out to our team so we can get them in touch with someone at DC to get them signed up. One great change that we've had with the appraisers is they do not have to go through the SAMS program anymore, which is awesome. When the loan closes, the packager is then paid at closing time. This is a great way for nonprofits.
Thank you. One of the great changes for the appraisers is that they don't have to go through that SAMS process anymore. So when a loan closes now and we have a packager on board, that is when the packager will get paid. This is a great way for nonprofit agencies to find a way to supplement their budget with new income. Another push you will see that's going to come from national office is we will need leveraging partners. We have great partners now, but we need more statewide. We may need to do more than a 20% leveraging with financial institutes like we use today. Today we have a $1 billion project or budget, but each year our loan average has increased, and our average home today is $199,000 in South Dakota. That means we need more leveraging dollars to help us get more help out to more people. This year we ran out of funds in August, a full month before our fiscal year ended. So if we can get more local dollars to help in each purchase, we'll be able to extend our dollars for more help. This is not only in the 502 program, but in our 504 program also. So if you're interested in assisting, please reach out to one of our local offices or to Julie Gross, who is currently as our acting program director. The last thing we want to highlight is that you know that we can purchase stick-built existing homes, and we can build stick homes, including the governor's house, and we've always been able to do manufactured homes off an approved dealership lot. But did you know that we can also purchase existing manufactured homes if it's on its own lot? It just can't be in a mobile home park. But if it's on a permanent foundation and it's a 2006 or newer model, we would be able to help purchase that home. That opens up a whole new market for us. As you know, COVID-19 has affected us and has affected a lot of our families. So we have issued this year a lot of moratoriums to families. If you know of someone that has a rural development loan and they're struggling to make their payment, they just need to call our customer service center in St. Louis. These are just some of our upcoming changes in rural development. We have a lot of going on, and we're excited about some of these changes coming down the road. We want you to know that we are here to assist families in housing as it's a vital part of our economy, and we want to help keep it booming in South Dakota. In case you don't know who some of our team members are, we have Roxanne in our Aberdeen office. Donna Plucker is in Watertown. Grady Olson is in Pierre. Mitchell has April Norton, and we have gained a new member, which we're excited about, Laurel Duder. In Sioux Falls, Shannon Klein-Sasser. In Huron, Vicki Hamilton is going to be a support person for our program. And in Rapid City, we have Melissa Byrne and myself. Due to the COVID, we are in phase 1, and so our offices are only open part of the time, but we are always available for phone interviews and appointments, and you can also get us online. So if you have questions about any of our programs, please feel free to check out our national website at www.rd.usda.gov for more information. And with that, Brent, I'll turn it over to you.
Great. Thank you, Ruth, for pitch hitting and coming in when we lost video. I apologize for all the technical difficulties that we are having. There's a couple comments in the chat box. Kimberly Gerard from the VA got back to us. And in the chat box, there's a link for all the VA circulars. And she also gave her phone number for contacting the VA Lone Home Program staff between 8 and 6 p.m. Eastern Standard Time. There's a valuable phone number there. Fannie Mae, Jessica Wright, on behalf of Fannie Mae, got back to us on Ask Polly, and that is available to lenders with a seller servicer number. We do have one question for Kimberly from the VA. KMAC asks, any recommendation for lenders that are willing to do a VA jumbo loan? She does not have an investor that is willing to do that at a competitive rate. So Kimberly, if you're still on the line, would you be able to share your thoughts?
Hi, Brent. So unfortunately, we can't recommend individual investors for the VA jumbo loans, but we did eliminate the loan limit for the VA veterans with full entitlement, and more information would be available on our site regarding that. So I don't have more information than that, but unfortunately, we can't recommend one investor over another.
Okay. So this brings us to 12:15. Unfortunately, with the conference in this format, we're not able to go the hour and 15 minutes or the hour and a half that we normally go and try to get questions. But if you do have questions and you'd like to email them to me or any of the presenters, they'd be happy to answer them, or I'd be happy to forward them on. So with that, I want to thank everybody, Jessica, Ruth, Roxanne, Carla, and Kim, for participating in our virtual conference. Again, we can't say this enough. We apologize for the technical difficulties and the patience. We appreciate your patience. This is our first stab at a virtual housing conference, and I think all in all, it's going pretty good. So thank you, everyone, and have a great day.